Now, one of the many reasons why I particularly prefer to use the TradingView platform, and I've been doing that for many years, is that they keep on improving, improvising themselves in their product. And so time and again, I've noticed that they come up with new indicators or new tools, new ways to plot the price, something new, something which adds value to us gets offered from them, which I really appreciate. Thank you. And recently, there were many updates to multiple indicators. And in this video, we are going to talk about the updated relative strength index. I know RSI is a widely used indicator, and there are particular reasons why it can be, it should be. And so we have this updated version of RSI. I believe this came around a couple of weeks or a month max back. So I'm a tad late to talk about this updation, but then I will use this interaction not to just update you about the updated RSI, but also from how can it be useful. So now we can see that the RSI is coupled with a moving average. Many traders love to use moving averages on the RSI. RSI, if let me give you some perspective from where I'm trying to explain this. If you look at the RSI and a line chart, you will notice that each and every highs of the price and lows of the price matches with that of RSI, which means that whenever RSI goes up, price goes up. Whenever price goes up, RSI goes up, and whenever price falls, RSI falls. This consistency holds across various parameters of RSI, not only RSI 14, but even if you plot RSI 3 or 2, you will notice the same consistency. This is probably the key reason why I love to use the RSI indicator. So, prima facie, when you look at it, you observe that it's like a mirror image. It's very, very similar. The rise and falls are extremely similar. And it is, yes. Then your conscious mind should ask you questions. Why am I looking at the same lines twice? I might as well much better off with just the price. Well, this is where the difference lies. RSI is calculated in such a manner, the formula is such, which makes it an oscillator. It's a banded indicator, which means it will never go above 100, neither will it ever fall below 0. And that's why the concepts of overbought and oversold. So it's got a glass ceiling. It's got a ceiling and it's got a floor which it cannot break on either direction. On the other hand, prices can go anywhere on the upside as well as the prices are not banded. This is the particular reason why we notice divergences. Prices are falling, but RSI is not falling because the formula is such it will not fall, right? And so RSI tends to give you a mild leading indication of the price. And so if you compare, let's say if we plot a moving average, let's say a simple moving average, where are we? Moving average exponential on the price, and let's say we choose 21 period, give it a little bit of darker color and thickness, okay? And now if you go to the settings of RSI, and now if you choose EMA 21, and I don't know why they've chosen yellow with a purplish background, beats me completely, but let's just give it a little bit of aesthetic sense to it. And so if you plot the same exponential moving average on the RSI, you will notice that there will be a leading indication. RSI will always tend to break its own average before price does that. Okay, not means most of the time. Over here we can see it is almost exact, and over here as we look at the daily chart of ICICI Bank, we can clearly see that RSI has broken below its average, where prices have just broken a day back. So traders do like to use moving averages on RSI. RSI momentum indicator leading in nature, so if it breaks its own moving average, it too will be leading in nature. So there are various schools of thoughts, various parameters you can use. You can use multiple moving averages, that's up to you. But the good thing about the updated RSI with the TradingView is, if we go back to the inputs, there is possibility of plotting various types of moving averages, and there is a possibility of plotting Bollinger Band on the RSI. Now this is interesting. I personally prefer to use Bollinger Bands, essentially use the concept of standard deviation to figure out extended situations of movement of that particular price or indicator. Now looks decent. I'll just reduce the background, and now we have the Bollinger Band plotted on the RSI. Let's make the RSI a little thicker. It should stand out. That's better. And let's also remove this EMA, go to indicators, and bring in Bollinger Bands on the price. Okay, so we have the Bollinger Bands plotted on the price and the Bollinger Bands plotted here on the RSI. Two standard deviation, you can use two standard deviation. You can use a combination of 1 and 2, but I think for RSI 2 standard deviation is fine. And how can this be useful? Well, I feel that again RSI will move faster than the price. It tends to lead a little bit, and the way you can use this primarily is to figure out M tops and W bottoms. If you're of the understanding that if every time RSI goes outside its own Bollinger Band and price also does the same at the same point of time, then these can be contrarian signals. These can be signals wherein both the price and the derivative of price, which is RSI over here, both of them have gone outside the 2 standard deviation. So it's extended. I'll look to create a contrarian view, like anything. You can sell futures, you can sell calls, or create strategies. That is okay. Most of the time, I think more than 50% of the time, it should work in your favor. At times like these, you will have to pay the price, wherein the strength of the trend will be so much and the strength of the trend will be so much that it will just not come down, it will take you up. So you can do these kind of trades, you can create these kind of anticipations, but I would suggest do not trade just based on the fact that price and RSI has both gone outside 2 standard deviation. A better approach would be, okay, price and RSI both have gone outside 2 standard deviation. So now there are chances of the prices to correct. And so now I will act upon price. So take the signal from price. Both the price and RSI outside Bollinger Band creates a setup, creates a possibility, not a trade. And then you take the trade, create the possibility into a trade when price confirms that, which means that some kind of divergence or some kind of a bearish pattern or something on the charts which comes directly from the price and not an indicator, which confirms that yes, now we can act upon this possibility. So this is number 1. And number 2 is you can act on the W bottoms and M tops. There are times when both of them will form the same thing, and at times only RSI will. In this particular chart, we have an example where we can see here that prices have gone down. The first one was outside, The price has gone outside the Bollinger Band, and the second time it's inside. This is called the W bottom. And because it's lower, because the second one is lower than the first one, it also gives us the possibility of a divergence. And then when we look at the RSI has also created a W bottom in itself. Is it a positive divergence? Number one, yes. Is this a W bottom on the price with Bollinger Bands? Yes. Is it a W bottom with RSI and its own Bollinger Bands? Yes. So this makes your expectation more stronger, and of course this was a phenomenal move up. Rare. It probably will not going to get this all the time, and all the time it's not going to give us such a big move. It's just you were lucky. Look here, another example wherein on the same chart we have another situation which is very similar to the first one, and then you can notice that the first one was not outside, this one was not outside, this one was outside, but it's good, it's not that bad. And then you get a little disappointed. Come on, the first one was such a beautiful move and this one's such a shallow one. So how much you will get, the move, the final move will shape up, that we don't know. But then again, these kind of setups do create a possibility which you can act upon. Now that we're talking about this, if you notice when you got this signal, if you notice the difference between the two Bollinger Bands here, and then when you got this signal, and if you take a look at the difference between the two Bollinger Bands here, that gives you a perspective, doesn't it? That this is a far more contracted market than this was. So contracted market will always open up. So your expectation of a relatively larger move is much more than over here. So I see this, and I also fall prey for this, that every time we get a setup, we get so excited that it's going to make us a lot of money, that we tend to not look at the other aspects, sides and elements of the charts. But nevertheless, not a bad tool. The good thing is now you don't have to plot an indicator on an indicator, and just by going to the updated RSI, you may or may not, if you don't want it, you may just keep it as an SMA, go to the style and uncheck the SMA. You're back to raw RSI and nothing else. I hope this was useful. Share your thoughts and comments if you're using it. If you're using an indicator of an indicator, I personally use the Bollinger Bands on the 8 years quite a lot. So share your thoughts if you like this video. If you have any suggestions and comments, please feel free to do that. Enjoy the weekend and take care of yourselves.